Hey everyone, it's Richard. You're watching The Plain Bagel. Would you let AI give you financial advice? That's a question that's come up recently on the news from OpenAI that ChatGPT will soon be launching a new finance-focused window called Finances, specifically designed to offer effectively AI financial advice. A tool that will allow users to ask ChatGPT for tips on cutting expenses, guidance for their investment portfolios, and even allow users to throw together financial plans for certain finance goals like buying a home, giving people a lot of power to carry out tasks that would traditionally be carried out by a human financial advisor. With this news being followed up just this week with an announcement from Robinhood that the company would actually soon allow users to trade entirely through AI agents, signaling for some a ramp up in the AI revolution of the finance industry. Now, people using AI for financial advice isn't itself inherently anything new. People have long been making a habit of asking platforms like ChatGPT for things like stock picks and the like, with Vlad Golik, co-author of a recent McKinsey report on AI and wealth management, highlighting that we're already seeing over a third of consumers across age groups using AI platforms to help with investment guidance, and OpenAI themselves highlighting that more than 200 million people come to ChatGPT every month for budgeting, questions about their investments, comparing different paths, planning for future goals, and more. There are also already a lot of finance-focused AI offerings out there that have built wrappers around platforms like ChatGPT. For example, Portfolio Pilot uses ChatGPT to offer, quote, complete financial advice for self-directed investors. But this is the first finance tool offered by OpenAI themselves. And what's different here is that it will actually allow users to connect their bank and investment accounts directly to ChatGPT so that the platform can offer tailored financial insights, with the announcement showing a number of examples for how ChatGPT can utilize your personal data to inform its financial responses. So as a registered financial advisor myself, I thought I'd go over the topic of AI advisors and whether people should use them, the pros and cons they present, and generally if they pose a real threat to advisors like myself. Now, naturally, I'm going to have a bit of bias here since I like my job and would like to keep it, but I actually think these tools might prove quite useful if people understand them within their context. So I'll try to present a number of different angles to the topic. But we'll start off with what we know so far about the ChatGPT Finance offering. As highlighted by OpenAI themselves, this feature is currently being piloted to US Pro users, meaning individuals who are paying the $200 a month subscription. So it's unclear if it's planned to be a paid for feature or if it will be more widely accessible with more basic tiers of the subscription, but so far, it's only available at that $200 tier. And in their announcement, OpenAI includes all kinds of examples of how users could get financial advice from the offering, including asking for a review of your investment portfolio, a breakdown of your expenses by category, and tips for saving money, and other tailored queries. With the platform able to integrate visuals and charts into its responses, and supporting more than 12,000 financial institutions, demonstrating that this is likely to be widely available regardless of where you bank or invest. The platform will also store so-called financial memories, or details you share in prior conversations to provide further context for the AI model. So for example, if you highlight that you have a specific goal, the platform will save that information to help with future prompts. In terms of broader privacy, ChatGPT highlights that while it can access balances, transactions, investments, and liabilities, it does not have access to account numbers or have any authority to make changes to your accounts, with ChatGPT giving users the option to disconnect their accounts, at which point their synced account data will be deleted in 30 days. However, conversations with ChatGPT and so-called financial memories will have to be deleted manually by the user. Now, OpenAI specifically highlights that this is not a replacement for a professional advisor, which I guess is their version of hashtag not financial advice. But you can see it's trying to offer a pretty comprehensive advice-like experience. But I know what you're thinking, Richard, why the hell would I trust my financial data with an AI? Even beyond the more apocalyptic concerns about AI using our own data against us to take over the world and enslave the human race, finance is a pretty sensitive topic, so any advice on the subject is pretty consequential. And AI can't even spell at a 5th grade level sometimes.
How many E's are in the word 17?
There are no E's in the word 17. Even though it sounds like it might, the letters are S-E-V-E-N-T-E-N, so it has 3 E's, not 0. I misspoke initially.
Well, yeah, great point. As impressive as AI models are, they are also so complex because of their iterative self-coding process that they're also prone to hallucinations, whereby they just kind of start making stuff up, spitting out inaccuracies or misinformation as gospel truths, or just do more quirky things like calling themselves Mecha Hitler or bringing up goblins in their responses a surprisingly frequent amount. However, OpenAI tried to address that in its announcement, highlighting that the company had worked with a team of finance professionals to train the model and has benchmarked its ability to respond to challenging finance tasks, with the latest model seeing a score of 82.5 out of 100, which isn't bad. That's a A-. Still, it leaves a pretty big question mark about how bad that 17.5% is. Is that just an error message or a rounding error? Or are we talking about ChatGPT telling people to YOLO their life savings into Fartcoin? The degree matters here. So it's yet to be seen how good or reliable this financial advice proves to be, which might be why we're only seeing this being piloted at this point. But as mentioned, AI advisors are here. We're already seeing a lot of offerings in the space, and this just signals one more step towards it becoming a more common offering. So what are the pros and cons? Well, one of the biggest positives is that these platforms make financial advice much more accessible. The truth is, the finance industry doesn't have a good economic model for providing high quality financial planning for smaller investors. A standalone financial plan can cost thousands of dollars, and investment companies who offer highly qualified advisors as part of their investment services also tend to limit their offerings to households with a minimum account size, leaving most people to deal with higher fee, potentially lower qualified advisors from bank branches and the like. With AI advisors, however, people with any asset base can get a pretty in-depth review of their financial situation 24/7 on demand, which is a pretty big positive. Now, the feature currently only available under that $200 a month tier. The ChatGPT advisor is still relatively expensive on a $100,000 account. That would represent a 2.4% annual fee if paid throughout the year. But technically, people could just pay for 1 month and get all their prompts in. And people might be getting value out of ChatGPT for other reasons. So, could still be considered a fairly cost-effective finance tool. Now, in addition to accessibility, there's also the speed of the response, the fact that you can get a financial plan within typically seconds, the fact that you can submit multiple inquiries or prompts and request different iterations of the financial plan, so there's a lot of flexibility there. And there's also a chance that people will actually be more honest with an AI advisor than with a human one. Finance, as you can imagine, is a pretty vulnerable and sensitive subject for some. So people might choose to withhold details from a human advisor because of the shame, guilt, or just embarrassment they feel discussing their financial habits. You don't really have that problem when dealing with platforms like this. It's a lot like how people are pretty willing to Google their most intimate medical symptoms before seeing a doctor because there's not that fear that there's someone on the other side of that screen judging you for where you find yourself. So as you can see, there are some very valid pros to the offering, but as we touched on, there are also some pretty important cons, with the big one, as mentioned, being that ChatGPT is sometimes just wrong. As mentioned, finance is a sensitive subject. The advice people get can have a meaningful impact on the quality of their life. So while the benchmarking data suggests that the platform is generally good at giving financial advice, it also seems to have a bit of a gap. And those poor quality outputs could prove harmful to people depending on how severe those shortcomings are. And while hallucination rates are fairly low for straightforward general knowledge prompts, with one metric rating the hallucination rate at around 1% for GPT-5, which isn't even the current 5.5 model, it is fairly well known that the more specific and specialized a prompt gets, the more likely it is for hallucinations to occur, which could prove problematic when people are looking for in-depth professional financial plans. Another issue with AI advisors is that the output is only as good as the input provided by the users. Yes, with the ChatGPT Finance offering, users will be able to link their financial accounts, which should help better inform these financial plans. But in terms of the prompts that users submit, the details that ChatGPT has to build these financial plans are limited to whatever you provide it. Now, maybe ChatGPT will lay out the details needed for these types of more extensive plans. If you prompt ChatGPT, for example, for a comprehensive plan, it will list out some information it requires. But there's a good chance that these lists miss some important details, like whether you're married with kids, your general health, things that might come up more naturally with conversations with an advisor, but that users might forget to include in their prompt when they aren't given that more structured input requirement. Another consideration here is that prompt structure matters. You could get different outputs from an AI advisor depending on how you frame your request. If, for example, I asked ChatGPT for the top 5 stocks to buy today to hold for 10 years, versus the top 5 stocks to buy for today's date, the list actually changes slightly, with one including Alphabet and the other including Amazon. Now, that's not a meaningful change, right? But neither is the difference between the two prompts. So hopefully you get my point. Someone who isn't familiar with how to ideally structure prompts could end up with a subpar output for a financial plan. There are also privacy and security considerations given how much sensitive information people would be sharing with an AI advisor and the vulnerability that presents to either be hacked or even abused by OpenAI themselves. And then there's the fairly important point that ChatGPT isn't a registered advisor. Now, I know for some that might just sound like gatekeeper talk, but there's an important reason why that matters. As you're probably aware, in the US and Canada, and most other developed countries for that matter, you have to be registered as an advisor to give financial advice. There are some exemptions for things like general advice, where someone can go online and generally talk about the stocks they like and what they think people should do with their money, so long as it isn't tailored to an individual's personal situation. But the moment you start giving paid one-on-one discussions or consultations involving someone's money and how they should manage it, you can find yourself in hot water. But all this is exactly what ChatGPT is doing. It's receiving a fee to give financial advice. And while the platform discloses that it's not a substitute for professional financial advice, that's not a magic barrier from all legal liability, any more than a finfluencer putting hashtag not financial advice or a prediction market putting hashtag not gambling. Actually, apparently that one works, but you get my point. Now, in the US, there apparently is a route to provide registered financial advice through AI platforms. Portfolio Pilot, for example, is an AI tool offered by Global Predictions Inc., which itself is registered as a registered investment advisor with the SEC. But OpenAI has not gone down that route. And even for Portfolio Pilot, the registration still required the CEO and Chief Compliance Officer to pass the required examinations. So the platform argues that the advice is entirely AI-based, the SEC is still interested in that human knowledge requirement for those involved. Now, the reason why this matters is that without registration, OpenAI isn't held to the same rules and requirements that registered financial advisors are, meaning that there's no fiduciary duty or duty of care, no requirement to ensure that financial plans are properly informed when they're presented to individuals, since there's none of the know your product or know your client requirements. Advisors have to demonstrate that they've done the research to understand the funds or securities they are putting clients into. And even things beyond that, like in terms of how to handle conflicts of interest. For example, ChatGPT announced a partnership with Intuit, the tax planning software, to integrate some of its tools into the ChatGPT Finance offering, effectively allowing individuals to access certain tangible tax tools and even professionals through the ChatGPT platform. Now, I have nothing against Intuit. That actually sounds like a good idea. But it is effectively a paid partnership or promotion, with Intuit actually paying ChatGPT for this right to integrate its tools. And this sort of advertising could prove a very lucrative revenue stream for OpenAI, since they have so much user data. People are basically telling the platform what they want, and they can then connect those people with advertisers who are willing to pay for access to that market. But that also comes with conflicts of interest if we start seeing those finance tools integrated into this offering. If, for example, the platform were to partner with an investment company, maybe it would start redirecting users to the investment offerings, even if that's not inherently what the user is looking for, or if it's not appropriate for their situation. Now, to be clear, conflicts of interest exist with professional financial advice as well. Only about 3% of advisors in Canada are registered as fiduciaries, meaning that they have to put the client's interest above their own, meaning that most advisors are either incentivized or limited in terms of the solutions that they can offer their clients. But how those conflicts of interest are disclosed and managed are pretty strictly regulated, with there being a lot of repercussions for advisors who don't follow the rules, or again, put their clients in inappropriate products based on how they're compensated. When it comes to ChatGPT, there doesn't seem to be those same user protections. So we'll have to wait and see how regulators deal with this legal ambiguity. I suspect that we'll see someone eventually sue OpenAI for giving inappropriate financial advice, because whether you're registered or not, giving inappropriate financial advice can still get you in trouble. But at this moment, there's no explicit protection for users. So it really is use at your own risk. Now, with all that being said, I still think AI advisors are a handy tool to have access to if people recognize their limitations. For DIY investors, I think it's awesome to have another tool available, although frankly, for $200 a month, I think there might be other tools that are built specifically for financial planning that would be better to pursue if you know what you're looking for. In the industry, for example, a lot of advisors use software like Conquest, which helps to build out those in-depth financial plans. That one's not specifically available to individuals to use, but there are competitors that you see for retail investors online. And I think a more tailored solution like that would be better in most cases if you, again, know what you're looking for. Yes, it seems ChatGPT is generally going to offer good information most of the time, but it's kind of like the jack of all trades thing, master of none. Usually better to go with something that's been programmed with that expertise baked into it. And given the hallucination risk with LLMs, you're going to want to scrutinize any output from an AI advisor to verify the math and reasoning before actually implementing anything. Still, if you treat ChatGPT with the same skepticism as an anonymous Reddit post or a Google search regarding a medical concern, then great. I think the more tools we have for underserved investors, the better. But you really need to understand the limitations. For example, I really wouldn't recommend using AI advisors for things like stock picks, despite I guess having done so earlier. This was a really popular thing to do when AI first came out, people rushing to use the platforms to ask for stock picks and research on different companies and investment opportunities. And in fact, we have platforms like GPT Investor that claim to have outperformed the S&P 500 by relying on AI stock picks. But when you scrutinize the results, you see how unsophisticated it really is. A lot of AI platforms, for example, are YOLOing their money into individual stocks, which is why the returns are higher, is because you have a few outliers pulling the average up. And you have to recognize that LLMs like ChatGPT are language prediction models. They're not judgment models. These systems aren't going through and researching research reports, looking at obscure data to try and come up with some elaborate investment thesis around these companies. It's effectively putting together a string of words that sounds like a good response to what you asked it based on what it was trained on. There's also the issue with stock picks specifically that if AI is sending the same 5 stocks to everyone who asks it where they should invest, that you'd essentially be buying into an inflated asset, and the risk of that being abused, again, whether by OpenAI, by hackers, the issue of that being taken advantage of. Now, will AI advisors replace typical financial advisors? Well, I do think that as we get more DIY tools like AI, that it's allowing individuals to replace certain advisor functions. But in its current form, I don't really think it's a meaningful substitute for advisors as a whole. We saw a lot of the same conversations when robo-advisors were first released, with people thinking that it spelled the death of financial advisors because people could now, on a general DIY basis, get guided asset allocation for their investment portfolios. And certainly the DIY approach has been a growing trend given the ever-expanding toolkit available to individuals. But financial advisors have maintained their position in the finance ecosystem largely because those specific functions aren't necessarily why people are reaching out to advisors in the first place. With one poll by Vanguard finding that peace of mind remains the top reason people seek out advisors. In fact, some robo-advisors actually moved back to adding human advisors to their offerings to better meet client demand. AI doesn't offer a whole lot when it comes to the emotion management side of the business, which I think gets discounted a lot, but is important. The Dalbar studies, which have long argued that most individual investors underperform the general markets, often cite emotional factors as being the biggest drivers of this underperformance, rather than security selection or asset allocation. So while I do think that we're going to continue to see that DIY trend grow, and advisors are going to have to stay competitive with these heightened offerings, especially in the case where people might feel underserved by their advisor, I don't think at this stage, it really substitutes the more holistic advice that you can find in the industry, especially when you consider how long it's going to take for users to trust these platforms enough to rely on their advice without feeling the need to scrutinize or verify everything.
Okay, I see what you mean now. Yes, there's only one E in 17.
But then again, maybe that's just cope, since I'd be out of the job if that happens. So you can let me know in the comments what you think about AI advisors, if they're really a replacement for traditional advisors. Thanks for watching. I hope you found this video helpful. If you did, please do make sure to like, subscribe, all that good stuff. It does help the channel tremendously. If you'd like to hear me talk more about this exact topic, I recently filmed an episode over on the Dead on the Money podcast with my co-host Derek Deadman, another registered portfolio manager, on this exact thing. I did steal some of the data points, so there's a bit of overlap, but you can check it out if you'd like more content. Thanks again for watching, and as always, be safe out there.